Good morning, good evening, wherever you are. It is the 15th of May, Wednesday. I'm going to start with the stock markets. I might do this more often actually, because this is where all the fun and games is right now, having had such a boring period in stock markets. Emini S&P daily chart. Okay, so I was looking for a bounce off what I suggested was the best support of the week at around 28.11, 28.09. We had longs with stops below 2800. I think that just about worked. We bottomed at 2800. So if you were long with me, then we had a really nice bounce yesterday, as I hoped. We got to 28.53. I can show you why we got to 28.53. It wasn't quite as far as I was hoping. We had this resistance area at around 28, well, the high 28.30s anyway. The 100-hour moving average held it. So I still think there's a chance we can get to the what I think is stronger resistance at around 28.60. So we've got a trend line and a confluence of Fibonacci resistance levels there. Obviously, we're going to have to get through 28.50, 52 to do that, but I see this as more minor. So if we can get up there, it's got to be worth a short, as you know. Clearly, if we were to start breaking up above 28.65, then we've got to break out of this little downtrend, which is about 2 weeks old, and then we'd be heading up towards 28.80. I don't see that as very important resistance. We have got a gap to fill there. We have got the 200-hour moving average, and we have got the 50% fib, but I don't think we've got anything else up there at 28.80. Just let me check the daily chart in case there's anything relevant. No. But what we do have on the daily chart is resistance in the high 28.60 area. So really, that whole 28.60, 28.70 area will be the key resistance on this bounce. Now, as you can see on the price action on the way down, that level held. What I'm thinking now, I'm jumping the gun a bit, but I'm wondering if this could be a head and shoulders pattern. So this is a very small left shoulder, a rounding top head really, and then if we hold 28 below 28.70, we could get a small right shoulder, then a break below the neckline at 2800 would be our sell signal, and that would trigger losses in the region of 150 points lower. So we would be looking at 26.50, which would be somewhere down here. Ties in nicely with the trend line that I've got in here. It means we would also need to break the 200 and 100 day moving averages and test the 500 down here at around 26.85.80, and then get to this 50%. Well, we've got a 78% fib in the short term and a 50% fib on the slightly longer term. And as you can see, a bit of trend line support going back 1 year here. So anyway, that's a theory. We've got to see if it plays out. First, let's see if we can get short around 28.60, 28.70 and see if my theory plays out. The obvious support that we've got to watch is 28.10, 2800. Clearly we're in a short-term bear trend, which happily we spotted back here when we got the bearish engulfing candle. So below 2800 is our next sell signal. We're looking at 27.80, 27.75, 27.60, and maybe as far as 27.20 to 27.15. Dow Jones had a bounce. I'm not sure why we found that as a good support level, but we did. So again, we could do something similar. This could be the left shoulder to a head and shoulders pattern. This could be the rounding top head, and this could be, we could form a left shoulder. I mean, we're way off it, obviously, so I am speculating, but we'll see what happens. Let's see if we get up to 25,900 or even 26,000 to form that right shoulder. We are getting a little bit oversold on the daily chart, bearing in mind we're in a bull trend. The bulls will always fight back in a bear trend, and you will get good rallies. Again, the 100-hour moving average held a Dow Jones rally, so we need to see if we can hold on to 25.60, 25.40 on the downside, and then push up through 25.660, 670 to reach 25. Well, you can see this 38.2% fib at 25.770, 780. This looks like a nice selling opportunity if we get anywhere near sort of 25,900 by then. The 200-day moving average will be slightly lower than that. Nasdaq pattern is not dissimilar to the S&P pattern again, so I don't need to talk you through it. You can see the neckline is at 72.90. We've got some resistance around 75.20. We've got the 75.75 fib resistance, which did certainly work the support on the way down for at least a couple of days. And I'm just going to show you the hourly chart. Okay, so we've got good resistance up around 7,500. If we get up there today, 7,500, 7,510, this will be the key resistance for the Nasdaq. Even the DAX could form a head and shoulders pattern with a small shoulder, left shoulder here, similar sort of rounding top. I've got to take my fibs off, these are the wrong levels. And we could form that right shoulder. If we bounce to, well, the left shoulder is only as high as 12,050. We don't have to have a right shoulder that matches the left shoulder. We can go higher and then break the neckline, but the neckline is obviously at 11,840, so just watch that. I don't think the short-term chart's really telling us much. Not really. I'm going to leave that one alone. I sent my premium subscribers a report on gold and silver yesterday. Gold, good bullish breakout in the longer term bull trend, or we've certainly had a bull trend since August of last year. I'm questioning whether this is a bull flag, a little correction, and then the break higher gives us a the start of a new bull trend. Slightly disappointing yesterday with this minor negative candle, the new high, the lower close. But as long as we hold above the 100-day moving average around 1295, 1296, bulls remain in control. If we dip a little bit, we do have good support around 1290, 1288. So as long as we hold that, we're all good for the bulls. Silver, as you know, looks less positive. We're going to have to get up through 1497 for silver to catch up with gold and have a more bullish outlook. Short-term chart for gold, well, we've got a little bit of fib support around the mid 1290 area, which seems to have held. We just dipped as far as 1293, but I'm suggesting that we buy into longs on dips. There is just one thing that bothers me in gold, which I should point out to you. There's just a trend line going back right to the low at the end of 2015 when gold started some sort of recovery anyway. It was mostly a sideways trend, as you can see, and I pointed that out in the report that I sent you yesterday, the special report. Now, this trend line has had some effect, less effect recently, as you can see here. The price didn't respect that trend line so much, so I'm not too worried about it. But certainly yesterday we topped exactly at the trend line, or this week we did 1304. I've got it at, and the high was 1303. We've got that and those fib levels on the daily chart around 1303. Again, the fib levels I don't see as particularly important, so I'm just making you aware of it. I think we will get up through there eventually, but that's the only worry for me being long gold. Oil is just trending sideways. There's not really much to say. I identified the fact that 6090, 6070 was a good support level, coupled with the 200-day moving average, and that has certainly worked well for 1, 2, 3, 4, 5, 6 days in a row. So if you're buying it on dips to this level, it's working fine. Clearly, we're going to need a weekly close below there to Friday night for the outlook to be more negative. But yeah, just trade that support and keep buying it and taking a profit on it until the situation changes. The Aussie dollar, we are selling into rallies. We had a little bounce back to that 69.60 area, which I suggested was a short yesterday. 69.60, 69.65 was my selling area. We missed it by a pip. Don't know if you managed to get into a little bit of a short. There was a small profit on there. These Forex markets are really quite quiet, especially compared to the stock markets. New Zealand dollar just tracking below this trend line, so as long as you're selling it on rallies, you're doing okay. The New Zealand dollar will have to break up through 65.95 to confirm the downtrend has been broken. Whether we go up is another matter. We may only get to 66.20, 66.25 and then trade sideways. Just because we break a downtrend doesn't mean we definitely go up. It often means we go sideways. But anyway, it would mean that we don't want to be selling into rallies at that stage. Okay, so you can see that clearly on here too. We've got good resistance around 65, 85. A break above 65, 95 would be a little bit more positive, and I would see a good chance of us getting up to 66, 20, 25. As I say, this shows it probably a little bit more clearly on the daily chart. Dollar yen sideways, not actually seeing any recovery alongside the stock market, so that's interesting. We plunged. We saw a stronger yen with the plunging stock market. It's a little bit of a bounce, but nothing serious. So we've got this very minor trend line coming in at around 109.60, 109.70, but we've got the fib resistance up here at 109.80, so that will be quite key. Not really sure what to do with this. It's going to be pushed around by the stock markets anyway. So in my view, you might as well just trade the stock markets, which look a bit clearer. Euro yen seems to be consolidating losses. Don't see this as a bullish pattern. Okay, you could argue it's a double bottom, but I'm not sure about that. I think this is more of a sideways pattern. Obvious resistance at 123.50, 123.60. So we'll need to break above 123.60 to break the downtrend, to break the short-term downtrend. Canadian dollar still up one day, down the next. British pound breaks lower, back below the 200-day moving average. So I think that's quite significant. Question now is, do we test the April low at 128.63, and a break below there would be negative.